What is keeping this market afloat? You can stab it, you can shoot it, you can set it on fire, and it still keeps going higher. It's like the boogeyman in a horror movie. Well, the jobs number came out Friday, and it was very weak, much weaker than expected. Only 22,000 jobs had been created. Plus, we had downward revisions in May, June, July. This isn't the first month that we've seen a weak jobs number. In fact, it's been brewing for quite a while. Why isn't the market going down? Well, one of the reasons is that everyone is expecting the Fed to cut rates in 2 weeks, 10 days actually. And right now there's about a 90% chance that the Fed is going to cut 25 basis points. There's even a 10% chance that they're going to do a 50 basis point rate cut. And what typically happens is that the market rallies after the first Fed cut, and it rallies for approximately 3 months or so. The average gains vary, but somewhere in the 2 to 3% range. What does all this mean right now? Well, we can see that the market has been gradually floating higher, and it's been on relatively light volume, and we're starting to see a couple of little pullbacks in here. So the nice steady price action that we saw back in here is starting to falter just a little bit. What we didn't see was an August decline. That surprised me, especially when we had that really bad jobs number right in here, and when May and June were revised lower substantially. After that, we also had a really hot PPI number, 0.9%. The first thing that we see is we see an increase in producer prices, and then later we start to see that flow into the CPI. Well, this week we're going to get the PPI and CPI, so we'll be watching for those price increases to flow into the consumer sector. That's the major news that's coming out this next week. And then we have obviously the FOMC statement in 10 days. The market has a tendency to float higher, and good expectations are built into that. So I'm looking for this to continue. Now, there are some stumbling blocks, and the stumbling blocks are that this is not just a one-off number. We've seen weakness in ADP. They reported very weak job growth in the private sector last month. We had Challenger Gray and Christmas saying that the employment surveys that they have been coming in weaker. The JOLTS report, the job openings, also showed a decrease. So this is not just the BLS number that came out Friday, which, by the way, it's been hard to trust the BLS number because there have been so many dang revisions to it. But all the other surveys and numbers that have come out are consistent with a weakening jobs backdrop. So what does the market do? Well, I'm going to put up my comments from the chat room on Friday morning. So these are comments that I put out before the open. Thursday, typically on Thursday, we're going to see lackluster trading ahead of a major economic report. And it doesn't get any bigger than the jobs report. All of a sudden, we start to see this gradual float higher Thursday. Pretty uncharacteristic because typically institutions are going to be squared up. There's not going to be a lot of activity. They're going to wait for the number to come out. But Thursday, we had this gradual float higher and a pretty substantial rise in the market before a major economic release. That told me that no matter how the number came out on Friday, that the market was going to react positively to it. If the number came in really weak, well, the market was going to rally on the notion that for sure the Fed was going to cut 25 basis points and maybe even 50 basis points. If the number came out better than feared, well, okay, the Fed's still probably going to cut and the backdrop isn't quite as bad. So either scenario, the market's going to rally. And I'd mentioned that in my first sentence here. As you look down in my pre-open market comments, this is where I had mentioned we do not chase gaps higher to a new all-time high because that typically attracts profit taking, and those gap reversals can be particularly nasty, and that's exactly what we saw on Friday. So those of you who jumped in and thought, oh my God, look at the market's gapping higher. It's at a new all-time high. I got to get in early because this thing is really going to go. I was already in the mindset, and you can read my comments here, that I'm not going to chase the market. If we get a gap and go formation, I'm not going to participate. It can go without me. And whatever gains I miss on the upside, I'm always going to have an opportunity to get in. I'll be able to buy a dip that's going to happen later in the day. I'll be able to day trade for some gains. But what I absolutely, positively do not want to see is I don't want to buy too early and then have the rug pulled out from under me. The risk of that downside move is way too great. So I'm going to sit and I'm going to watch, and I'm suspecting that on a bad number like this is exactly when we could see one of those nice gap reversals. And I traded it. I'm going to show you how I traded it and how I used relative strength and relative weakness to my advantage. So before we go any further, if my content has been helping you and you like the trade ideas, please give it a thumbs up. Subscribe to my YouTube channel. It's going to help my ratings. It's going to help me reach more traders. Ultimately, that's all I'm trying to do here. So let's take a look at the price action on Friday, and we'll go into the 5-minute chart. And you can see how early in the day we had this nice big gap up. This is a real head scratcher, and I've got to tell you that I haven't just been scratching my head on yesterday's reaction. I was wondering in August, how the heck is the market able to float higher when the backdrop is so weak? So we get that really bad jobs report. Then we learn that this is not just a single bad jobs report. It's actually been bad for 3 months. We just didn't know it because of the revisions. We get that jobs report. Then we get a really hot PPI of 0.9%. Okay, that's it for sure. That is definitely going to put the brakes on the Fed because they've been waiting and watching for possible inflation. Then we get a really bad ISM services number of 50.1, which is almost in contraction territory. Market didn't care. It just continued to move higher. So you don't need to look at the fundamentals. You need to follow the technicals. And if you do follow the fundamentals, then you have to at least curb your position sizes and not be as aggressive. And that's why I've been in more of a short-term trading mode where I'm taking day trades, short-term overnight positions, but I'm not doing a lot of longer-term swing trades, which incidentally, I'd asked many of you on my Twitter feed what type of educational content you'd like me to cover in my videos. I'm going to be doing the Sunday videos where I'll highlight a pick, and then during the week, I'm going to do more of an educational type of video. And I'd like to hear from you. What kind of topics would you like to have me cover? I'll talk about anything from day trading to swing trading to managing positions, entry tactics. So please leave those in your comments. And what I recently received on my Twitter feed was that you'd like to hear more about swing trading. So I'm going to be doing that video probably Tuesday or Wednesday. I'll release it. It's not going to have any picks. It's going to be an evergreen type of video that I think people will be able to go back and watch for many months in the future. So back to the market and what was happening Friday morning. So we had this nice move higher, and then we had this long red candle. It was an engulfing candle, and it took out all the previous price action. So it closed on its low, and now we're in the gap. Well, I had already suspected that if I was going to get a move, first of all, I was not going to chase the market higher. I was not going to be trading from the long side. So why don't I take a look and see if there are some shorts that I would entertain taking if we got that gap reversal. But I needed to see that long red candle. It needed to come early. It needed to come in the first half hour, because if we were going to see profit taking on that move, it was going to happen right away. Institutions were going to go in and smack the market down. And so right here, I already had my pick ready. Now, I didn't know for sure if the market was going to continue to have follow through. I didn't know that this was going to happen for sure. I suspected that it might. I felt that the probability of it happening might be pretty good, but I didn't know for sure. You don't know anything for sure. So what type of opportunity could I take? Could I short futures in here? Yeah, sure, you could short futures in here, but every one of these dips has been bought with a vengeance. And what happens if you get a little head fake into the gap and then whoom, big, long green candle to a new all-time high? Well, if you're trading futures, you're going to have your head handed to you. You're going to take a substantial loss on that position. But if you look for stocks that have been relatively weak, then that relative weakness already tells you, as the market is heading higher, that there is selling pressure on that stock. So if the market did do one of these head fakes, reversed, and made a new high, this stock has sellers, so it should not do that. But if the market falls apart, like it did, then this stock should participate in that sell-off. In fact, it's probably going to lead that sell-off. And if you think about who would be hurt the most in a weak employment backdrop, banks. And so what I did was I was watching Citigroup from the open. We'll go into a 5-minute chart, and I could see, remember, the market gapped way up. Citi did not. Look at that long wick right there. That is a tell. That is a bearish hammer. You can see the relative weakness using our indicator right here. And you can see how it is not able to rally with the market. If the market rolled over, would this stock sell off? The answer to that question was yes. So in here, once I got that first long red candle by the S&P 500, SPY, I knew that I could take a position. And I took a position in some weekly options, 0 DTE options, in fact. They were the $96 puts. Stock dropped all the way down to almost $94, so I was scaling out of the position in here. Was I going to hang on to the position for a long time? No. It was 0 DTE, so I wasn't going to be hanging on to it more than that day. These options are very volatile. It's a really nice gain for me. So I scaled out, and it was a good thing that I did, because by the end of the day, those options closed at the money. These market bounces have been pretty fast and furious recently, and you can see how the market rallied substantially off the low. Let's go and take a look at my last pick, by the way. I always like to review the previous pick from my video, and in this case, it was Google, and that video came out on Monday, which was a holiday, so the first day that you could have taken a position in Google would have been on Tuesday morning, which was right here. And this set up really nicely. So this is where the video came out, and this is what the stock did on Tuesday. It pulled back to the EMA 8. That's exactly what I told you to do in the video. Wait for Google to pull back. Pulls back to the EMA 8, so you had plenty of opportunities to get in Tuesday morning. You can see this is the price action on Tuesday. So there was the close Friday. There's how the stock opened. You can see this nice little dip. Well, the stock rebounds and it gets into the gap. Now, yes, this stock benefited from an antitrust case that went in Google's favor, saying that they are not going to have to spin off Chrome. That's a huge move for Google. That was about a 10% move overnight. You don't typically see these mega cap tech stocks make a move of that magnitude if it's not earnings related. But this was a big material decision that was in Google's favor, and you can see how the stock is continuing to move higher. I still like Google. Google, by the way, is the type of stock that I would want to be swing trading. So we'll get into that in the next video. Really like the price action in Google, and look at what it did on Friday. So you have this massive market decline on Friday. right in here. What did Google do? Well, it rallied with the market and it pulled back. It preserved its opening price. So if you're going to trade the long side, if you're going to trade a market bounce, Google would have absolutely been a great pick. And you can see how the market bottoms right about in here. Google's been strong, green line above zero, relative strength, could have gotten in here. And again, this is kind of the inverse of the city trade that I showed you where it had relative weakness. This stock has relative strength. So if you're buying in here on support and the market goes down, the stock is going to hold its own. It has buyers. Those are institutional buyers. They don't care what happens to the market in the next 15 minutes, the next hour. They want to own Google for the next year or 2 years. And that institutional money is in there buying it. That's the support. That's the safety net that you can lean on so that if you're trying to establish a position on the notion that the market's going to bounce, you don't trade S&P futures, because if you're wrong, you will lose money. If you buy a stock like this, it's got institutional buyers. It's going to tread water. It already has shown you that it's going to tread water because the market was selling off and it found support way before the market did. So if the market keeps going down, it's going to keep finding support here because those buyers are interested at this level. If you're correct and the market does bounce, well, this is the type of stock that's going to lead the charge. You can see it goes from roughly 232 to 235. That's a really decent move. So I like Google. I'm going to show you another pick that I like. Let's get back to the market just a little bit on what we can expect the market to do in here. So how or what actually would it take for me to get really bearish and for me to carry a bearish swing trade over the weekend? Well, I'd mentioned this to members and what we needed to do, and you can see that I have my alerts set here. This is the low from Thursday. So if you think about the price action that we had, this is a very, very steep move. Steep moves have a tendency to bounce, so we can expect a bounce in here somewhere, and these bounces tend to be pretty tall when we have a steep move like that. So we get the bounce, and then the market can't really do anything. I did try a short in here. I was able to scratch the trade. I shorted on this breakdown here. I actually did short futures, and I reeled them back in for a scratch. I could see that this is very stubborn price action, and this bounce is taking a very long time to be resolved. What the heck does that mean? Well, if you get a move like this and there's very heavy selling pressure, the bounce should be brief and shallow. So it should not get back up to VWAP. It should not last much more than a half an hour or so. And those sellers are so anxious, they just come in and they start taking out bids, and you get the next leg lower. That's what a really weak market looks like. Then you know that sellers are firmly in control. Well, in here, this bounce starts to linger and linger for a long period of time. You can see how this little breakdown in here, it didn't have the type of selling pressure that we needed. This bullish hammer was a clue to me because you can see it had a long red candle and a long red candle, and if it would have closed on its low, great. That's the type of price action I want to see, because then we have a good chance of testing the low of the day and maybe even taking it out. But it bounced, and then we had these compressed, tiny body little candles. That is a sign of support. Buyers are in there. That's why we're not seeing those long red candles. So I took my scratch. I didn't get the move I was looking for, and we got a nice little relief bounce into the close. So I would have needed to see a close well below Thursday's low. That would tell me that there's persistent selling pressure and that this is finally the bit of news that's going to break the camel's back. Didn't happen. Instead, the market rallied back up, closed above VWAP, tells me that buyers are still there and that this is probably going to turn out to be another one of those buy the dip, buy the dip, buy the tip type of situations. We'll see how the market opens up tomorrow, but I'm suspecting that we might see some nervous jitters for a day or two, but that this dip, this little pullback that we had on Friday is probably going to be resolved to the upside heading into the FOMC statement. So what happens after the FOMC statement? Well, good news is going to be priced in. We're going to see that 25 basis point rate cut. They may even signal that they'll do another rate cut this year. It looks like the bond market's certainly pricing it in. It depends on what happens on the CPI and PPI this week. If we're continuing to see pretty heavy inflation in those numbers, it's going to put the Fed in a holding pattern. They'll do a 25 basis point rate cut, and then they're going to stand pat for a bit. Now, the Fed has also admitted that all of the tariff hikes, the price hikes, are probably going to be temporary. So you're going to have an adjustment phase, but that this is not going to be persistent inflation that we see for a long period of time. So I don't think they're going to freak out if that inflation lasts a month or two, but then they're going to be watching for signs of it to subside. The long and short of it is that if I look at the market action, the price action that we're seeing in here right now, we've got fairly jerky types of moves higher, a few little retests, but those little tests of support, they're not a week long, they're a day long. They barely even last a day. And that's a sign that buyers are still engaged. What I would ultimately love to see the market do, August, September. This has been my best trading setup throughout my career, is that we see weakness in August, September, and then that flows into the middle of October. And that pullback sets up a beautiful year-end rally, and that move gets slingshotted to a new all-time high. And you have very, very strong market momentum from the middle of October through year-end and even into January and February. When I don't get that pattern, what it tells me is that I didn't get that big pullback that's going to produce that big snapback rally and that big year-end opportunity. I don't think that it's going to set up this year because of the Fed rate cut and because the asset managers are going to be looking for a year-end rally already from the middle of September. We never got the pullback, so we're not going to get that slingshot move higher. Probably going to see us muddle our way higher like this into year-end. And so there are going to be some rallies, there are going to be some dips. You have to still be in dip buying mode. When you get the dip, you get the rally, it starts to compress, you have momentum that's starting to wane, you have to take profits, you have to stay short term, stick with day trading, stick with overnight long positions, take your gains, wait for the next dip. Get your next dip. Okay, then here we're looking for any kind of rally. You've got maybe 2 or 3 days where you can be long. You start to stall out. We've got a marginal new high. Get ready to reload. Wait for the dip. Reload. So that's how you need to be playing this on a short-term basis. There are some swing trading opportunities, but you have to be very, very selective in the stocks that you're trading from the long side. And that's what I'm going to focus on when I do my recording Tuesday or Wednesday this week. I am going to be doing a live event with Harry, by the way, on Wednesday. So I'll try and get that video out. Now I'll try and get it out Tuesday. So let's take a look at a stock that I really like. It is one that I think sets up well from a swing trading standpoint. CRDO. Now, this is a relatively choppy stock. It's not super glamorous. It's not super exciting, but I do like the price action. You can see how it's been very steady. There's almost a trading channel that you can visualize if you connect the highs. You've got an upper trend line and a lower trend line. You can see how the stock has kind of been staying within those confines. The stock came out and they reported earnings this last week. And you can see that it had a really nice gap up to a new all-time high. Beautiful little breakout. And what happened on Friday? This is the tell. If this stock was going to pull back And if this move, this earnings reaction, if this move was all fluff in here, what would have happened on Friday? They would have played whack-a-mole with this stock, because anybody who is interested in taking profits on this gap up, you can see that the red candle indicated that the stock was not able to revisit the high. Anytime that you have a gap up after earnings, it takes time to digest those gains because there are going to be some natural profit takers. If you throw a gap reversal for the market into the mix, what should have happened on Friday? The stock should have been pounded. It didn't get pounded. In fact, you can see the stock started to rally early Friday with the market, and then the market sold off hard. The stock preserved its overnight gains. It was up, even with all of that market selling. We didn't see that level of profit taking post earnings if this had all been fluff. So buyers gradually came in, and you can see on this stock, you do not have to be an aggressive buyer. I showed you in the D1 chart, it's in this upward sloping trading channel with lots of dips. You will have opportunities to buy this stock. You do not buy a new high of the day, especially if it's overextended with stacked long green candles. You wait for it to pull back, and then you wait for a breakout above VWAP. Then you know that support is confirmed, and you know that the stock wants to move higher, and you wait for relative strength. If you have all those components, this would be a nice entry on a stock like this that has a really nice D1 chart. And post earnings, I believe this is the kind of stock that's going to gradually grind higher. So I like it on a longer term swing basis. I bought some shares, not a lot, just starter position. So how do you trade a starter position when you're swing trading like this? Well, when the stock distances itself from the EMA 8, you do nothing. You ride the position that you currently have on. When you get a little pullback to the EMA 8 on a red candle like that, you want to see that red candle reversed instantly in the next day or two. Okay, well, there's your entry point right there. So you just add a little bit to the position. And now your average cost is still way down here. So you're just averaging in and you're buying these little dips. So I think this is a good place to put a starter position on in CRDO. And I'm going to get into more swing trading techniques that we can use in that video that I'm going to put out Tuesday. And then we've got the live event on Wednesday. So hopefully you've been able to get a lot out of the content that I'm putting out there right now. Please leave your comments. Let me know what type of educational content you'd like me to post. Can be on anything. And then I'm going to basically be picking from the content that the most people want to see. So thanks so much for watching. Good luck with your trading this week. Make sure that you keep an eye on CPI and PPI. And then obviously, as we get close to the FOMC statement in 10 days, the action is going to slow down a little bit as we head into that number. And then we'll see what the Fed has to say. Trade well. We will see you Wednesday.
Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.